According to the latest KPMG CEO survey of over 400 companies, 91% believe there will be a recession in the next 12 months, and only a third of them believe it will be mild and short. Joining us with more insights from the survey is KPMG's U.S. CEO, Paul Knopp. And Paul, these are pretty concerning results when you hear that these CEOs think that in large part a recession is coming almost unanimously. Only a third of them think it's going to be mild and short. What are they doing as a result to kind of shore up for that? Because that could in some ways make it a self-fulfilling prophecy or make it worse.
Becky, good morning. And yes, the survey certainly revealed that CEOs are concerned about a potential recession in the next year. But I think, too, you wait to think about the continuing risks that we're facing into. So we have supply chain disruption. We now have inflation, the continuing risk around cyber. I think there's some notes of optimism, too, in the report, Becky. One that I would point to is 56% of CEOs are looking at significant M&A to continue their transformational growth agendas, along with continued investment in digital technologies moving forward. And then, while there is concern about a potential recession, the CEOs reported, vast majority of CEOs reported they're very confident about their growth prospects over the next 3 years, as well as the resiliency of their companies in the U.S. economy.
Paul, I think the statistic that really jumped out at me is 51% are considering workforce reductions over the next 6 months in preparation for this recession they think is coming. What kind of workforce reductions are they planning?
Becky, I think that, we learned certain lessons during the course of the last 2 years. So, the economy rebounded very quickly in 2020 after the recession that was at the onset of the pandemic. We lived through the Great Resignation. So CEOs are very cautious about workforce reductions, but at the same time, they will consider them when costs need to be reduced because of a potential recession. I do think that we've learned, though, that people are our greatest asset. And I do believe that any kinds of workforce reductions will be very sector-specific stories and ones where CEOs will be thinking about trying to, again, be cautious about reduction of workforce.
I think this gets to the heart of what the Fed is kind of trying to do right now, though, trying to slow the economy, trying to put it into what they would say is maybe a gentle recession. But this really gets to the heart of the matter. We're still looking at a very strong job market. Based on what you have heard from these CEOs, do you expect that to continue, or do you expect to see weakness in the job market? And if so, how soon?
Well, Becky, I think there remains a number of structural imbalances in the labor market. So you think about the baby boom generation retiring, some shortage of young talent in college enrollments, and certainly, the incidences of long COVID, which are still presenting some problems. So the structural imbalances, I believe, are going to cause the labor market to continue to be tight. And I think most CEOs are facing into that tightness in the labor market. So I certainly think while the Fed will be trying to create some cooling in the economy to try to calm the corrosive effects of inflation, the job market may remain pretty tight going forward.
56% of the CEOs you surveyed said that they have a high appetite for M&A. What are they interested in? What do they plan on doing?
Well, certainly we see that appetite for M&A, that strong appetite being present in the technology sector, various financial services sectors. So they are looking for opportunities to acquire workforce, to build their business. And we've seen this consistently over the course of the last 2 years, that CEOs have this appetite to really try to transform their business over time. And the thing that we've seen during the course of the pandemic is that we've all tried to become more digitally enabled, more automation. I certainly believe that CEOs are looking for those kinds of opportunities.